Hello, everyone! Welcome back to... What the hell is this? Great TRI's Top 100 Crypto Review! Ah! Yeah, we should bring the microphone really close. Come in, sports fans. How are you today? I hope you're having a great day. This is Brian Beamish, a.k.a. The Rational Investor, coming at you 100 miles an hour on a Wednesday evening with two cohorts in tow here tonight. If I understand correctly, Derek's wrestling with a couple little ones here. So as soon as he has the little ones in check, doing their little one thing, getting into baths, getting ready for bed, that kind of stuff, he will join us. I suppose on the East Coast it's 9 o'clock there, so I suppose it's getting close to their bedtime. But we do have Nick here this evening. Nick, how you doing this evening, buddy?
Awesome, Brian. How are you?
Good, good. And we have Ben, the Ben Kovchak. We're gonna make you
How's it
famous,
going?
man. How are you tonight?
I think it already is. I'm doing great. Yeah.
Excellent.
Yeah.
Good, good. And I was, that really resonated with me last week. I was sort of tongue in cheek. We'll just have fun. And Derek's like, hey, this is the Ben Kovchak, man. This is serious stuff. that was so cool. We're going to make an NFT out of you. But welcome back to the Frivolity Boys. And I don't even know if anybody's over there on YouTube. Oh, we got one person over on YouTube. Now, how does that work? Now, that doesn't make any sense. Right now it says current viewers, but I see, there's Colin. I see, you're over there. Oh, you're a bit redundant. So Nick's over there. Rocker's there, and Owazi. Hello, Owazi. Howdy from Sydney. Oh, down under. Hope you're doing well this evening. I have no idea how many people are actually going to join us here tonight, but having a bit of fun on Wednesday evenings. Used to do a show with the Coinigy Boys years ago. And Alex Sturck, and we actually used to use the Coinigy platform. So kind of nostalgia. I did hear that Coinigy was bought out by another firm, but if I understand correctly, Rob and Will are doing well in life. But I kind of liked using this Coinigy platform to do some of our TA here over the summer as we looked at these various cryptocurrencies and did a little bit of TA for you. Coming into the end of the summer, in fact, I guess technically the summer itself has, summer ends in 5 days. And if I understand correctly, here in Vancouver, British Columbia, Canada, the sky is going to open up here this weekend, and we're going to be reminded of what an arboreal rainforest actually looks like. So get ready for the rain, West Coasters. They don't call it the wet coast for nothing. But we're coming out of the summer. This crazy COVID world, just so topsy-turvy up and down. So I don't know how you guys are doing in your respective necks of the woods, but I hope things are going relatively okay for you there. We did, I don't know whether there was really a cadence to this show that we did through the summer here, but it was a lot of fun. I mean, this is our 13th episode, so we've been banging away at this for a while now. I guess I thought I had, where the hell's our spreadsheet? No, I was just commenting on it a moment ago. Where the hell did it go? Is it over here? Oh yeah, here we are. Looks like we were generally relatively cautious. Looks like a couple of people here were a bit negative. Nick actually was a bit positive, and good old Brian was pretty much neutral. Is that where we are now? 48,000 on the corn. So what is that? It's not even a. Was that a 1% move? What would 1%? 46.
That'd be about 4% or so, I think.
Oh yeah, that's two. Yeah, okay. So I think we got to give this week to good old Nick. I think you were the one who had this tapped correctly. So way to go there.
Everyone gets lucky sometimes.
All right, broken clocks right twice a day. I don't know whether I'm even participating with all of these zeros. I'm sort of just big Mr. Neutral Nelly. But it's been a fun experiment. I'll say at the very least, this has been a lot of fun working with the boys, getting to know them a little bit better. They are site members, and now all three of them actually are students in the education program, which pleases me immensely. In fact, actually, Nick was even saying that it's great to see on the site Mr. Benkoff Czech now has his level 1 badge. So welcome aboard, Ben. You're now officially official.
Woohoo!
So congrats.
Cheers.
I'm not exactly sure how we want to proceed here. We did have a few more names that we wanted to sort of get through just to finish off this top 100. I'm sure just even over the past month or two, a lot of these names have sort of jockeyed up and down the list here, and there are probably a bunch of new names here as well. So, what do you think? Should we finish off just a couple of these names just so that the list is rounded out, and then maybe go back and look at a few names and sort of review what we thought from previously? What do you think's a good plan here, guys?
Sure, let's do it. Yeah, I do agree that we should finish up the last two first, just to say that we finished it.
Okay, always good to do what you say you're going to do in this world. You know how important that is to me as a educator for traders. So I like that. Shall we start off with this UMA? I don't know exactly
Sounds
what
good.
that is.
Yeah.
Or do we want to actually? Maybe why don't we? We'll do these, and we won't do our sort of check in with our prognostication until Derek's here. And at least he can participate in that. So, all right. So UMA. Who wants to tell me what the hell a UMA is? What do they do? What's their big claim to fame?
Yeah, so UMA, it stands for Universal Market Access, and it's a Ethereum protocol that enables you to create your own custom collateralized synthetic cryptocurrencies. So basically, you can create your own crypto asset that tracks virtually anything. So I think Synthetics is a similar project. I think we did that earlier on. And yeah, SNX. That was up a little higher. But yeah, this one actually is from it started in the US on Wall Street actually, and there's by a former Goldman Sachs trader, and it has another Goldman Sachs VP that backed kind of launching it. So that's pretty promising when you have a name like that behind. But yeah, I kind of like the idea of being able to create a synthetic token for anything, whether it be real estate or tracking stocks or whatever. But I think there's a lot of problems that come with that, and a lot of regulation. So I guess we'll see.
Yeah, I suppose this is Mr. Gessler and all that kind of funness, eh? Are you shilling a security? And if so, man, we're coming after you.
Mm-hmm.
Interesting. So this is this SNX, and wow, did it ever have a big jump up? I guess that's going back a ways though. So I guess this one looks like, I guess it popped up like right at the beginning of the year there in January, and then sort of calmed down here a bit. So okay, well there's January. Okay, so I guess that makes sense. So these guys all had a big face rip at the beginning of the year, and then they've just spent the past 6-8 months just taking it all back. So, if anything, technically speaking, this is basically everything that I really want you to learn at TRI, in that, don't chase in our good old reload zones. So perfect analogy of that. So, if you do see an asset popping up here and you're kind of like, wow, I really like the project, somehow you just have to force yourself to have a little bit of patience and discipline. It's darn difficult to do. And, I was even talking to another gentleman tonight, and he even said, Brian, and I tell students this all the time. So, Brian, you can lecture me and you can tell me, if something's going to happen, then I'm going to do it. But a lot of times, or not a lot of times, but he even said, just him in particular, in this particular case, I actually had to see the actual cycle go through, and I think that he's gotten a bit more religion about buying when markets move down to the bottom ends of their ranges. Interestingly enough, on this one, I wonder if, like we have one gentleman on the site who's a huge fan of head and shoulders patterns. And I wonder, just looking at that, whether that looks like some big honking head and shoulders pattern here. So, I don't know. I would definitely say that, if you want to wait for the actual confirmation that this thing is legit and it's for real and it's going to survive, what I would say is, wait for that W kind of pattern. At least when you see this, then it's legit. Then if you want to try and hunt pullbacks on this move here for your entry, this is where we often get that reload zone within a reload zone. So you can kind of see how we had a green box here, reload zone, and now this is technically green. I guess that's teal. I don't know what color that is. There's green. If you can find situations like this where W fires and then you're hunting this reload zone in here, that's awesome. Love those trades. So, right now, coming off the top, still trying to figure out whether this thing's actually bottomed. Is there a particular fib that we want to study on the way back up to tell us whether this thing's actually finished going down and is now maybe a range? What do you think, boys? So yeah, let's see if anybody on the YouTube page can answer this question. And I love doing this. Kind of a pain in the ass. But I do love quizzing both my co-hosts and you people on YouTube. So wake up over on YouTube. This ain't no free ride. So is there a particular fib that maybe we can throw on the screens to sort of tell us that, okay, maybe this thing stopped going down, starting to go back up? Anyone? I'll give you guys a little bit of slack because it's a bit delayed, but I'd like to see some answers here, please. There's a guy I watched, and actually, you know what? I'm going to go get a napkin. Well, James, I want you to answer the damn question.
Yeah, so the other thing I will say, Ben, is it seems like UMA is kind of the infrastructure that you can build on top of with other protocols, but like with synthetics, it seems like they're the ones bringing out the synthetic tokens and not people building on synthetics as much. So I'm wondering if that's one of the differences between the two. But sorry, Brian was just trying to fill some time.
Yeah.
Right. Yeah, that makes sense.
So what's the magic number I'm looking for, boys?
Well, we got a lot of them here.
No, one number in particular. What was the question I just asked? And you two are my students. I mean, you're my paying subscribers, which means I get to be a dick with you.
You do,
so, yes. What number am I thinking here?
I would assume you're talking about the 38,
right.
2.
So this will sort of tell us where this correction slide really should come to an end. Interestingly enough, notice how that left shoulder actually lines up nicely with that thinking. I could easily see something like this work its way up into these levels into the end of the year, because I do like the idea that there's going to be a nice little pop here into the end of the year. But once that's done, I'd be a little bit leery. Also, too, I don't like how, hopefully you can see how this level right here, that's a big honkin' M. What are we supposed to think if we ever see the market smiling at us?
Wants to take your money.
Yeah. So it's interesting how if we can get that counter trend rally up into these levels, all it's going to do is let these poor little, the bulls that were all buying up through here, it'll let them get out. They can get off the couch. So what do you make out of an image like that? Ideally what I want to see is this stuff, right? This is the gravy. This is the poop, that kind of thing. And also, too, you can kind of see how it broke out and then came back down and checked these lows. And it just kept doing it over and over and over. So you could definitely say, kind of our little reload zones within reload zones, that kind of stuff. A great looking buy down here. I'd want to see the similar type of price action as what you see here over here to know that, okay, the bear slide is done and we're off to the races. New bull market. As it stands right now, one thing I really do like about an image like this is it doesn't look like you're chasing, and you're not. I find that most people that lose money in this game, they get, they turn on the computer. The computer, maybe spits out a whole bunch of news headlines and stuff. Maybe you're watching CoinGecko, Carpet Market, whatever. It's the story du jour. And people go, hey, you know what? That's a pretty good idea. I'll go and buy that, and it's going to pay for my retirement. But they don't realize that they're coming in and they're buying an asset well after the fact. You should have been buying down here when nobody was talking about it. So this is one of those kind of images where at least it doesn't look like you're coming in and walking into a trap. Now, the interesting thing about this is, of course, why is this asset down near the bottom end of its range right now? Well, it's probably about the fact that Mr. SEC is kind of like, you know what, I'm going to be cracking down on you guys. So, like I heard you guys making reference to this one and then that other one that I had on here, this SNX, as almost like you can securitize anything you want. Well, Mr. Gessler's saying if it's a security, you got to come and talk to me. So right now, I'm sure these people are like, okay, now what's our next move? And I wouldn't even be surprised if everybody is waiting for the sacrificial lamb. There'll be one story. They'll make sort of a big scapegoat out of it, a big sort of brouhaha, maybe even arrest directors and stuff. Handcuffs, the whole thing, humiliation, stuff like that. And then after that, we sort of have the precedent set, and then people sort of follow along with what the SEC wants. And they say, well, don't become like these guys, that kind of thing. So I can understand, especially in a name like this, why there's sort of reluctance to get too jazzed about it just yet.
It looks like I was just going to say, if you want to draw that diagonal trend line that you usually draw from the high, it looks like we're kind of buttoned right up against that right now.
Something along those lines. Yep, there we go. So what's our rule about, and actually you will just be doing this. Actually, you're going to get introduced to Kiran, Nick. So we'd like to hear a positive report from Kiran about your student and activities in his level 2 program. But he is going to be working with you a lot with trend lines in the level 2 program. So just to be a smarty pants and to sort of front run him, what's our rule about trend lines? Should we take a trade right here? What do you think?
No, well, definitely not before it breaks, though. I can't really tell on your diagram if it has broken through, but
well, it's right there. I mean, if anything, this is a fantastic analogy of trend lines, right?
But yeah, you definitely want to wait for a W on the other side.
Good. Keeps you out of a lot of trouble, I'll tell you. There was a popular cryptocurrency that broke out of a M top here recently. And I was just sort of like, guys, don't chase. For God's sakes, don't chase. And this I think, is a really good example where you may actually find, yes, the market breaks out. Oh, look, I'm going to get rich. And then bang, right back. And you might find that this son of a gun just simply just rides this trend line back down the other side here. So it happens a lot. And so that's why I have that rule. So It took me a long time to sort of, get rid of the ego and wait for the structure on the other side of these trend lines. But, 1, 2, 3, 4. If we get a nice break and then that move on the other side, I think you got something to work with here. So that's kind of cool. If anything, what I would like to see here is the break, then the pullback, then your W, and that's like a solid gold buy signal. So let's keep our eyes peeled for that. And if anything, it's kind of good that the market does kind of look like this now, because this is a kind of name where I can at least put it on my shopping list and go, we actually have half decent location. Now just show me all the internal stuff that I want to see to justify buying. All right. So actually, yeah, that's a good point. Thank you for mentioning that, guys. Some people are asking if they can access the spreadsheet. This spreadsheet is kind of like my working document on the site. So it has like all my VCIMs, my low share counts, Shitcoin 5,000 challenge, got all my fills, at least a good chunk of my fills. My combine performance on the site, Korean barbecue challenge. So I don't really want to give this out to the public, but what was so cool, and this is sort of the 1 + 1 = 3 about TRI, is Ben, as one of my assistants here, came along and he created this really cool little app. And if I'm not mistaken, actually, I think it has like a lot of the charts and stuff. Actually, let's go and find that chart that we were just looking at there a moment ago. I don't think we'll have the one that we did today.
I haven't updated it live. I'll have to put the latest in at the end of the night. But
yeah, so like this one was from a week or two ago. So let's see if that's in there.
Okay.
Yeah.
Yeah, if you click on that trading view link,
look at that
below it.
Oh,
it'll take you to the that'll take you
yeah.
to
So you can access all of this off of Ben's app. Isn't that so cool? Man, that is so awesome.
And I did just put that link in the lounge.
Yeah, you're
on
right. In
TRI.
fact, here we can even give it to the YouTube people because somebody over there on YouTube was asking about it. So there you go, YouTubers. Boom. 1 + 1 = 3. I mean, totally top notch, next level. Beautiful work, Ben. All right, so back to our conversation here. Interestingly enough, this isn't a story that I would not be uninterested in. I'm uninterested when this happens because I don't want to chase and I want to make money from trading, right? So down here, they've actually removed a lot of the fluff from the story. I don't know whether you know me or not, but 78.6, I love 78.6s for trade location. And what I often find, and just as a quick little illustration, it's just sick. I mean, write this down. If you're here watching this video and you're like, well, I want to learn something, Beamish, are you going to teach me something that's actually going to make me a better trader? Because we can just, I don't know whether we can use Tether or not. But, all of these cycles, it's remarkable. I guess we can't see this one here because it doesn't have the price action before. But even this one, and I extol that we have one site member who I just think the world of, Kevin. And he forced himself to step in. In fact, actually, I think he forced himself to step in at 88.6, which is even a crazier level. Although I don't see 88.6 on here. It's so crazy, it's not even on here. So, he stepped in and forced himself to buy there. Look at that beautiful double bottom. But I often find, and I can show you, especially, I guess for some reason we can't go here. Maybe, can we get stamp or something? How does this work on Coinage? It's been so long since I've used them. That's not how you do it. What the hell have I done here? Let's try that again. BTC. All right, so where's stamp? Stamp's always a nice neutral one. BTC USD. I want to show you this because it's so cool. I mean, and if you don't know this stuff, you just write it down, learn it. You're here to learn this stuff. So is it that one? Well, I guess we can use this one, right? So this is when I first got into the crypto space. There's good old 78.6, and notice how the market actually stabs beyond 78.6, but then ultimately comes back and basically just W's, bottoms right off that damn level. And it happens like every single. I was telling somebody the other day, you want to make this really, really easy for yourself. You want to invest in Bitcoins? And write this down, people. It will save you countless heartaches. Because actually investing in Bitcoin is stunningly easy, but it's so cliche. And, the 1% don't want you to know this. They, throw in all the FUD and, pain in the assness of, like regulators shitting on people and stuff. But who is there? 78.6 again. Notice the market comes down beyond it and then puts in a darn W right off that darn level. I mean, learn this, people. It's so easy. And then you want to really make this incredibly powerful. All you got to do is you just got to simply say, am I close to a happening event? And if you are within, I would say, 6 months of a happening event, you can get in anywhere near that 78.6. This is so money. So, ironically enough, you can, even now, we're, going through the nutso blow off top part of this. Is there one more blow off top? There's 877s up there. Hell, actually, we don't even have it on here, but the next level after 877 is 16.88. Let's see. Oh man, it's such a big number. I don't even have that on here. Is that how we get up into our 100, 200,000s? And actually, I did a really nice little sort of simple Bitcoin overview video there. I think it was last week. It was actually last Friday because it was pretty quiet around the site and pretty quiet around my apartment. So I was just like, what the hell? Why don't we do a video? And if you're watching this for the first time and you're like, who is this guy? I did on probably a good idea to follow my Twitter feed. I do a lot of sort of stuff that I just want to get out to the public. This is TRI's Twitter feed, TRI_PMA. Josh runs it. It was actually created by Kevin. Really, really cool. Highlights a lot of the stuff that I talk about and do. But probably a good idea to follow me. CR Investor, kind of a weird handle. But in essence, I used to call myself, long story short, there was a guy down in the States, he was out of Minnesota, and he called himself the Rational Investor back in the 1990s. And that's when I was first starting out my brokerage industry business. And I wanted to call myself the Rational Investor, and he actually threatened to sue me. So I actually went and registered the rationalinvestor.ca. And I called myself the Canadian Rational Investor. So that's what CR Investor stands for, Canadian Rational Investor. And that's how long I've had this Twitter feed. I've had this, and it's kind of interesting. It says July 2009, but I've had this this working way before that. But anyway, that's here nor there. It doesn't matter. Point here is I actually did do a nice little Bitcoin summary video, which walks through sort of the monthly and the weekly levels. So we don't necessarily need to get into that, but I did it right here. Brian's Bitcoin summary from the 10th of September, and this is sort of monthly, weekly levels. So by all means, if you're watching me for the first time on YouTube and you're like, who the hell is this guy? And you want sort of a detailed Bitcoin analysis, watch the various episodes that we've done through here. I think we got 15 of them, or 13 of them. So here is today's. I think I tweeted it out. Oh, come on. Why does silly computers act like this? Well, it's got the wrong logo on it. But anyway, there is today's show right there. So you can find that on this side. So follow me on Twitter. It's a nice, easy way to follow me. Anyway. If you want a Bitcoin summary, nice weekly, monthly with levels and stuff like that, go check out that YouTube video. And that's sort of, I mean, believe it or not, my upside objective on Bitcoin. You ready? I mean, it's a staggering number. But I actually think Bitcoin could hit $300,000 here at the end of this year into early next year. Call me crazy. Not making any predictions. But if the market plays out, and really, you see these foggy boggies, this is a chaos theory. It's just really simply just a projection of this, right? So 4669s takes us up to 188,000, and 877s take us up to 328,000. In a crazy ass fucking orgy market, excuse my French, and U.S. dollars collapsing, everybody's lost faith in the U.S. Federal Reserve. And people are actually saying, you know what, get out of dollars. It's not a reserve currency anymore. Get into Bitcoins. I could see this thing happening. I could see that happening. Call me crazy, but I could see it. And of course, I've told you before, and anybody who's a long-time follower of me, understand that I am going to be selling into this rally. These 4-year cycles, they're fairly consistent. So this is the cycle that I talk people through on the site. This is what I think is going to happen here into the end of the year. But at the same time, too, we're not there yet, and we still got some shenanigans here. I actually think there could be a pretty big move to the downside coming up here in the next month or so before that face rip up. So it's going to be a wild ride here into the end of the year, no doubt about that. But if you want more of that kind of conversation, check out that video. All right, now back to our show here. Sorry about that, everybody. Slightly derailed us there. Let's get back to our conversation. So interesting to see this UMA. I don't know whether it's still at that level 98 on our list. From an investing perspective, this is the kind of name, especially when we go through bear markets, when you hear good fundamental stories and you're kind of like, it's not a bad fundamental story. It's just, it's not really a bull right now. So what do? I want to buy this thing. I want to invest, but I'm not going to go and throw the whole damn, kit and caboodle and, bet the farm, as they say. I'm trying to get that, there we are, this UMA. I'm not going to bet the farm here because, frankly speaking, I don't know what's going to happen. So what do? And actually, there's a good stock, a similar scenario. I don't know what the underlying fundamentals are on this. So that's the one problem that I have with crypto. When you're analyzing this, how many coins are out? Where are the insiders actually long? Is there any locked up coins, a supply that's going to hit the market and it's going to drive this thing into the ground? Those kind of things. I just can't comment on that because crypto, it's unregulated. And it's not very transparent. In fact, it's actually extremely opaque. Is that the word? I'm not sure if that's the right word. Foggy? Blurry? So, if you can tell me where insiders are along this thing, then that's an added edge. And, of course, in the stock market, I ran a book of business in the stock market doing exactly this for a very long period of time. And this happens to be an asset that kind of looks the same as that name, bottom, big rally, pullback right against the lows. I at least know what the fundamental story is on this. So I can justify, you can see me, I'm coming in here very slowly and just accumulating this thing. Now, if you believe that the fundamental story is solid on this, I don't have a problem with that kind of strategy. But that's a big belief. And frankly speaking, I can't comment on the fundamentals here. Sounds like a fun story. We know technically it's not really a quote-unquote buy yet. But is it cheap? Yeah. Looks pretty good. And actually there's this stock, and I have it all written up on the chart. There's a stock that actually reminds me of this. And it's this gem. It's a battery stock play. Same sort of thing. The chart, do you see the similarity in the charts? I like it when you have these big rallies. And then, on the other side of whatever the euphoria is, people sort of calm down. And these names come right back down to the original bottoms. And as you can see here, I'm not necessarily suggesting that this is a quote-unquote buy right now, but good fundamental value. So what am I going to do? Well, this is our little old lady risk management approach. Maybe take your portfolio, break it up into chunks. You could break your portfolio into 20 different little cars. which in essence is 5% of your portfolio. And then with that 5%, you've got some wiggle room. I'm going to attack this story with that 5% chunk. Do you have to go and buy all of it right away? No. In this particular case, you can see I'm suggesting I'll go and buy 1% here. I'll go and buy another 1%. Then if we start getting more technical evidence of bottoms, I'll add 1% as we go. And that's probably the same strategy I would suggest here. You want to, I mean, you know how much I love 78.6s. You want to just take a nibble off of that level? And actually, you probably could even bang out doubles off of that. Great. Could you say, well, you know what? There's a cute little W there. I'll go and add a little bit more on that event. Sure. I might just, you know, because we're below this trend line here, I don't know whether you want to get too gung-ho. But, you know, our rule is don't ever break that 5% rule. Just don't break it. You want to come in here for 1 or 2%, just, you know, start accumulating a position. And then as the technical picture starts getting better and better over time, you can always add to the position. I love that kind of approach. So that's probably the way that I would look at this now. This is, I would call this actually, it's okay to nibble on a name like this, especially down in this area near the 78.6. I don't have a problem with that. So I'm gonna officially call this nibbleable. Is that a word? Nibbleable? No, they're missing a syllable in there somewhere. So I'm gonna say sounds interesting story. Interesting, we'll say even, we don't have to say sound, we'll say, whoops. Interesting FA story. Nibbleable, if that is a word. Not buy just yet. That's probably the way I would look at it. You know, as I showed you with like those VSE stocks, I actually think that we might be in like value location now, especially if you can get down below that 78.6. I can start talking value. So it's interesting. Not necessarily a technical breakout, not necessarily inertia, momentum, but it looks like it's in interesting value levels. So there you go. I don't know. Is that of any value to you guys?
Yeah, of course.
Yeah. Okay. Well, that's cool. All right. So Derek, we're gonna say partying with the babies. So when he comes back, maybe he can fill that in. Nick says, doesn't thrill me. Confused by why people would build on it. Good. Okay.
I did add it's probably just my own ignorance, though.
Probably I've heard a lot of people talking a lot about your I want to say Cosmo, but that's not right. Polygon, right?
So one, I love Cosmos as well, but yeah, Polygon is what I was on earlier this year.
Yeah, man, I've heard a lot of people talking about that Polygon lately. So, all right, interesting comment here. What did you think of that SNX? Did you would you have the same comment about that as well?
No, that's why I was kind of confused. I need to learn more about UMA because like synthetics, I kind of understand they will go ahead and bring out a lot of the synthetic tokens themselves, etc. Where UMA seems more of like an infrastructure where other people can build synthetic objects on top of it, and so I'm just not sure why I would want to build on it versus just like having whatever I'm interested in being added to synthetics, and that's probably just me.
Yeah. So would you say that these guys are in competition with the synthetics?
Probably not direct competition, but it seems like they do similar things. It's just UMA is more like the infrastructure around allowing others to build out things like synthetics, whereas synthetics, the protocol actually has a lot of their own synthetic tokens.
From
what I can understand.
Okay. And Ben says, not a bad price. Good. Not a bad story. Got to get my paper trades in before. So, will it meet the a paper tradable asset? Because should we add it to the database? Because frankly speaking, probably a really good practice asset. It seems logical to me that you do a paper trade, Ben, boom, you just bought. I don't know what's your paper trade account value.
$1 billion.
$1 billion. All right. So who over on YouTube? Let's see if you can do some math here. And I on the just another sidetrack. Sorry, I got to derail you here. I was listening to another guy, and I used to do this with my audience. I used to make them jump through hoops. And I was listening to this guy. There's a nice lady here on this podcast. She trades inside bars. I love inside bars, and I teach people on the site inside bars in our candlestick patterns. So when I saw this, of course, it really resonated with me. But it was really cool listening to this guy. He had his audience jumping through hoops like every 5 minutes. So the first question I'm going to ask you, YouTubers, and I want to see as many of you answer this, because when they did answer his question, the lady that was on, she was like, "Ooh, that's impressive." So if I have $1 billion portfolio, what's the maximum amount of money I can put into any one single idea? Anyone? Come on, you YouTubers. I'm going to take a bite of my dinner. It's getting cold here. While I wait for your answer. $1 billion portfolio, what's the maximum I can put into any one idea? Raphael. You cheeky bastard. Now, why is his students so good and my students are just smart asses? I don't get it. Maybe I'm a smartass. You guys are just following my lead.
I was gonna say, have you ever heard this saying? And I'll mess it up, but like the students often imitate the teacher.
Oh, really? Is it that bad? Oh, shitty. That's not good. Damn.
No, it's good. It's good.
Anyway, for whatever it's worth, the answer I was looking for is a pretty easy answer. 5% of $1 billion? Anyone?
I don't think anyone actually got the correct dollar amount.
No, nobody. So I'm not doing a very good job as a teacher. Anyway, the answer I was looking for, of course, is if your portfolio is $1 billion, 5% of that is $50 million. Thank you, Brad. Now, are you going to go throw $50 million all in one whack? Oh, Jordan got it? Where's Jordan? I see Jordan answered 500,000, so not quite. All right, so point being, if Ben wanted to go and say put $10 million into this thing here at 1177, interestingly enough, 38.2 is 21. Do you see how, in a weird sort of way, by actually forcing yourself to buy down here, if all we do is we just get a check of this original breakdown level, look left, rally 38.2s, some sort of spike up into this area here, you actually manufacture yourself a double. Do you think that's an accident? I don't. I often see this happen. That bottoms come in and 38.2s are almost exactly double the price. So the institutional players, they buy, they sell half of the position, boom, now I got a free trade. So I guess the way that I would look at this is I wouldn't have a problem if you wanted to go and throw a little bit into that. So maybe, Ben, let's make this your first paper trade. Let's see what happens. Right. Can you show me patience and discipline and just wait for this 22 level to get hit roughly? I guess you're going to have to see 23 and change. And show me that you sold half on a double and you've established that risk-free trade. Once you get into that position, I couldn't give a shit what happens after that. Couldn't care. But get yourself into that risk-free trade as fast as possible. Reload zones within reload zones are an excellent way to do that, and just letting some go. as we just move back up into sort of the... This isn't even half of the range. That's the irony of it all. If I was a technician, which I think I am, should be, and actually this should be a good quiz question, I should be using this 0.5 number. Now, what is this 0.5 number? What does that actually mean? And more importantly, if anybody wants to really learn technical analysis, who came up with this 0.5 level? Was it anybody famous? Was it anybody important? Obviously, if I ask that question, the answer is yes. The answer is W.D. Gann. He was a very famous technician from way back when, about 150 years ago. Really, this was actually one of the very first technical analysis rules that I ever learned as a commodities trader. Is you should expect 50% retracements. And, if you were a bull and you were thinking the same logic, does it make sense? Doink, that's basically what that move is right there. And notice, once we hit the 50% rule, it started just going sideways. So it's sort of like, okay, I did the 50% correction, now what? So, really, I mean, hell, man, I think I've dropped about 3 or 4 rules here. I hope you guys are paying attention. I hope you're writing this stuff down. This is free lessons for you. That is taking me like 30 years to learn this stuff. Trendline breakouts, 50% rules, 38.2s, first stop targets. I mean, this stuff is gold. I suppose also too, if we can punch out through the top here, look left. Have you guys, I think I've said that to you guys. Hey, Nick?
Yep.
Does that sound familiar? So if we can clear through these levels, you can see there's a major hurdle right there, and that's probably tied in with that 38.2 level. But, it's pretty close. I guess that low, this high. You can see there's going to be a serious fight down in this area here. But nonetheless, as a technician, believe it or not, my target should be that 50% retracement level. And that's assuming, of course, this low holds. If we roll over and break to new lows, then you're going to have to drag that down with whatever low is ultimately made. And that's kind of why it's pretty important that we get market structure on the other side of this trend line to actually validate, yep, this is a floor. Like right now, we don't even know. This might just, and there's an M right here, folks, so be cognizant of that. What are we supposed to think if the market's smiling at us? We're below that trend line. So as I said earlier, technically this isn't a buy. It's in value area. And what you have to be worried about is that it just can't get over on the other side of that trend line. All right, I think I've talked that thing into the ground. What do you think? I think I asked you 10 minutes ago, if you got any value out of that. So I hope the answer hasn't changed.
Yeah, I actually feel like that's one of our better charts because you were able to, I feel like, talk about more concepts on that one than you have on a lot of the other ones we've looked at.
Yeah, well, especially when we're like right here. I mean, what are you supposed to tell people? In a weird sort of way, when we did this back in like May, can you kind of see that in a weird sort of way, that's exactly what we were kind of saying would happen, eh? Can you kind of see that? See, there's May right there. This is a different asset, but it's almost exactly the same.
Yep.
Like don't chase, don't buy up there, right? That's what this is. Don't chase a buy up there. Wait for some sort of W to come in. Look for that counter trend rally back against the trend line resistance. That's exactly what this is. Can you see that? I mean, it's actually kind of cool.
It just shows the patience too, because like that was 4 months ago.
Yeah.
And so if we're 4 months past and we're still waiting for it to get to the other side of that trend line.
And so, really good lesson for you people. What are you supposed to be doing in May? Anyone? This is a really, really good lesson. Buy when it How does that go, Ben? Buy when it snows, right? November, December, January, February. Buy when it snows. Sell when it goes. Really, really good analogy of that. Okay, I could probably just sit here and talk for 2 hours on this one, but we got one more to do, don't we?
Yeah, but I feel good we can get through it.
Oh, good. Okay. All right. SC. This one's been around a long time, hasn't it? I
I
got a
feel
funny
like
feeling I added some more of this one recently.
I think you did too. I think I remember you talking about it a little bit. But
So
this
we got
one,
here.
so we talked about Filecoin earlier this year,
Yeah.
and it was kind of one of those decentralized storage. So if you hear about like the interplanetary file system, I think it's called, um, that is, yes, an actual thing. But it's essentially a decentralized storage network that provides like the ability for people to store things decentrally around the world. And not have to rely on like AWS, Amazon Web Service, or Google Cloud, or Microsoft Azure, that type of stuff.
Yeah.
SIA is similar. It's peer to peer though, and it has a marketplace. And so if you want to store things, you can create. I think they're called file contracts with people who would store your data. And have various agreements that way. So it seems like it's a different spin on the decentralized storage network kind of niche or genre, and they're just doing it a little differently than how Filecoin is.
Okay. Hopefully, like you can see the trend line break here, eh? So our last story, we hadn't gotten through this trend line. And actually, this is not a bad example of what I often see happens with these trend lines. Notice how the market tried to trade it to it. And then, is that a buy? Oh, we got to go buy them because it broke the trend line. Nope. And it actually just kept working its way lower. And then here, finally, is the W on the other side of the trend line. There, that is such a beautiful analogy of that concept right there. So perfect. So, the fact that we have this big old W again. There's my buddy 78.6. What a surprise. I do, if this is a name, if I understand correctly, in cryptocurrencies, there's like different categories. So like Bitcoin, and I'm sure there's others, but Bitcoin in particular, store of value, and a way to offset sort of the dilution of our current fiat currency system. And I think primarily that's why Bitcoin was built, and it's serving its purpose really well. These file sharing names, I actually really like this idea. As you said, that Filecoin, that was very, very popular, wasn't it? There's also a couple others.
Yeah.
Storage. Isn't storage another one?
Storage is one, and then I think SafeCoin. I forget what SafeCoin's ticker is, but
yeah. So I like this as a almost like a diversified way to spread the risk out within the crypto space. So I like that. Clearly, big fat W's at bottom ends of ranges. So that definitely is going to appeal to a guy like me. Also, just eyeballing this sure looks like a Head and Shoulders. You often get these heads that actually are kind of like two-pronged. And I'm actually kind of thinking just something along those lines as a Head and Shoulders pattern. Kind of eyeball-ish. Not the. In fact, actually, what I would actually consider this is. Actually, I'd be interested. Let's see a nice quiz for you here. I don't know. It's not actually in the education program because I'm not quite sure how to fit it in. But what pattern does this sort of look like? Let's see if either of my hosts can figure out where my head is with this. Does that
like
look like any
double-headed Head and Shoulders?
Yeah, double-headed.
Or like a double Head and Shoulders?
Is there a chart pattern? And ironically enough, the chart pattern is actually trying to describe what randomness looks like. So that's your big hint. That sound familiar at all to you guys?
Yeah.
It's the looks like a billiard ball.
Oh, there we
Ben.
go. Nailed it.
Yeah,
Way to go,
I
Ben.
I asked you for that, and you sent me a ton of really great examples the other day on the site.
Oh, okay.
I've been looking at it.
So, obviously, this was meant to be. We were supposed to have this conversation. So that's kind of cool. I always have a hard time saving this. But this is theoretically what billiard ball theory looks like, and it explains the random, chaotic nature of randomness. And it turns out that randomness actually isn't very random after all. So I don't know whether you can kind of see that. I think this is the example that's kind of flipped over. So it's inverse image of that. But when I saw that chart, that's what sort of jumped out at me, is that it looks like that billiard ball kind of thinking. I don't know. Could be mistaken, but that, I don't know. Maybe I've just been looking at charts forever and I just see this stuff in my sleep. I don't know. But notice, big wah, 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 wah. Then you have this funny pattern here. And then we go back to wah, 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 wah. It's like, actually, this is actually fairly telegraphed. It's fairly orchestrated. Interestingly, too, somebody said, what the fuck is chaos theory over there on YouTube? Don't know whether I really have time to go into the whole sort of lecture of what chaos theory is. Maybe join the site. It's, in essence, think of this as a war, right? And these people are serious. I mean, I don't know whether you've ever risked serious money in the marketplace, but if you put down, I remember the biggest trade I did in crude when I was at this prop firm was like 5 contracts. So that was 5,000 barrels of crude, and crude at the time was about $110. So that trade was about $500,000 on one trade. I tell you, you get pretty stressed out when you're trading those kind of figures in the futures markets on one trade. So just imagine that there are people in the marketplace making these bets all the time, constantly. And in essence, this is an accumulation of energy. There's a lot of karmic energy built up. Chaos theory in particular says that, and it's fascinating because, Nick, you'll learn this in the level 2 program, Derek will tell you. We actually do a module in the level 2 program to try and help explain this idea of energy being built up in these ranges. But we use a charting method that was first put forth like 200 years ago, called point and figure charting. Well, 100, geez, yeah, well, let's say 150 years ago. And they actually used to have a methodology to actually figure out exactly where the breakout in all this energy is going to take you. In the point and figure charting methodology called the horizontal count. But interestingly enough, there was a gentleman who lived, I think he's still alive. Anyway, he was really popular 30, 40 years ago. I make lots of fun about his hairdos and stuff, totally 70s hairdos. But his name was Foggenbaum. And he actually came up with the mathematical ratio of what this energy expressed after the breakout should actually look like. And that is all around, I gotta remember where the hell I put it because it was so cool. Kiran actually created an NFT around this because it was like an absolute eureka moment for me where I was able to connect the dots. Oh, come on, baby. Thuggenbum! 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 I was able to connect the dots with, you can sort of see this is the consolidation and then the the breakout here, right? The bifurcation of the energy is the breakout, and how far should that energy express itself? So this is your answer. What is chaos theory? The question ultimately is, how do you convert this image into what asset prices look like? That was a huge leap forward for me. And I don't see anybody anywhere. In fact, I remember I worked with a guy. Well, I didn't work with him, but I had lots of interviews and saw him years and years and years. Guy who founded Interactive Brokers. He said he made his fortune off of trading chaos theory. Chaos theory basically told me I bought this asset at 6 cents and I sold it at 80 cents on this penny junior piece of shit stock. Why? Well, because chaos theory said that that's where it was going. And it was so cool to watch price just cranking higher here. You could see that the market makers didn't even know what the fuck was going on. The computers had just totally taken over. And it was incredible just to watch the relentless grind right up into this chaos level. And then literally, as soon as the market hit it, poof, it just melted away from there. It was like it had to get hit. So that's the talk about chaos theory. And just in simplest terms, just to keep it really simple for you, we don't need to really go into too much teaching here. Just simply identify your W and then just draw the magic numbers are 2.618, 4.669, and 8.77. These are just in essence those bifurcation. And you'll notice, Brian bangs out doubles. So I'm going to sell some at 2x. Then what's double 2x? Well, that's 4x. Well, there's another bifurcation level, 4.669. Then what's double that, right? We're getting up into that 8-9 area, right? 8.77 turns out to be the bifurcation level. So you put those levels on your chart, and it actually gives you some really good levels at which the energy that was expressed all through here, it's dissipated. And notice, as soon as we got to this 2.669 level, you better cool your jets. And sure enough, boosh, right back down. And what's really interesting about this is quite often what happens is the market will go up, it'll tag 2.69, then it'll come back down, it'll check the original breakout, then it'll consolidate, then it'll break out to the 4.69, doesn't go backwards, like so. Then comes back and checks 2.69, same sort of thing. Then it'll go up to the 877, like I showed you that other one. And it's like literally the way markets express themselves. So do yourself a favor and write that shit down. That's gold right there. You know what's so funny is there are people on the internet that charge you like $10,000, $15,000 for like fluffy courses that don't even really teach you anything you can actually take to the market and use tomorrow. That's free. I just taught you. You can take that to the market tomorrow and start using this concept right away.
And it's wild how often those levels hit.
Well,
it's just incredible.
It is, yep. It's what should happen. And the interesting thing about crypto, of course, is that it's very algorithmic. It's very mathematical. It's very computer sciencey. So if anything, crypto has to follow this even more than some like fucking stock that some guy's shilling down on the floor of an exchange and you have no idea what the hell's going on. So yeah, I agree with you, Nick. It's quite remarkable to watch this stuff. Having said that, are you going to learn how to incorporate this into your trading plan, become a guru trading this just by watching this? Probably not. We got one guy who watches these YouTube videos. What the hell's his name? Great Del Moody, I think.
Del Moody. Yep.
And that guy's smarter than shit. He'll probably be able to do it. My advice for all of you is, consider this infotainment, edutainment. Maybe I've opened up Pandora's box for you. Go and spend the next week studying chaos theory and all the various different mathematical relationships and how it works in our universe. What I would really suggest you do, if I have perked your interest, is get your butt on the site and let's school you, because we're scratching the surface talking about chaos theory, because all this stuff really, it all should work together in your plan. And what I'm a really big fan of is the idea of confluence. So if you have like a whole bunch of levels, like for instance, I've got this inverted head and shoulders. Well, maybe I can measure the distance of the head to the neckline and then start projecting that above the neckline, which is how you use Head and Shoulders, is, again, if you don't know this stuff, get your butt on the site. I mean, I'm just spitting out this shit tonight. But notice that neckline, the breakout, is going to take us up into that 4669. Then also, we can do a fib off of this low back up to the high. And lo and behold, 4669 lines up with 50% rule, which lines up with that Head and Shoulders objective. So now you can say, well, I'm going to use WD Gann, I'm going to use Head and Shoulders theory, and I'm going to use chaos theory to justify why I think the market's going to head to this level. So I hope that helps. Just bringing the shit tonight, eh?
We've had a couple really good coins to go through that's allowed you to go through a lot of stuff.
Yeah. Well, and that's the good part about what I do. Nothing ever changes with what I do. It's exactly the same. In fact, we had a gentleman on the site the other day. He's been on the site since 2014. He's been on the site a long time. And he still has his level 1 badge. And I'm like, that's either a sign that I'm a really shitty salesman, that since 2014 I can't get you to complete the education program, or you learned this and you learned everything that you needed to know and you were content and you were happy to go run your business of trading. And I think he said, well, Brian, I think it's the latter. But the point here is, I asked him point blank, really important, has the message from Brian changed over the years? And he said, absolutely, emphatically not. Message never changes. So, and it's kind of interesting that, when the seasonally dangerous time of year, sell in May and walk away, we were doing the charts like through this period, right? And we were kind of like, oh my God, be careful here, people. Oh, this has got trouble written all over it. And you remember like our little summary that we were doing, a lot of these, it was just like, can't touch it, can't touch it, can't touch it, can't touch it, right? But at least now we're at the point where, hey, we can actually, ironically enough, we've come and gone. We were in a buying window, and now we're actually leaving the buying window here. So it's, if anything, it's a great testament that if you do this correctly and you just watch over time, you should literally see everything that we talk about play out, just like totally cliche. So, okay, I think. Well, how do you think? Did I do a half decent summary on this thing? Should I leave it half off? What do you think?
I loved it.
Yeah.
Okay. I guess the way that I would look at this is, had you had the kahunas to step in and buy this reload zone, that would have been like the trader trade, right? Right down here. Look at that. 61.8. Oh, God, drives you crazy. Where are we here? There we go. Look at that reload zone. Ay. And what do we call this 2-candle bar pattern here, where the bodies look almost identical, fairly large, and they paint like this very well-defined, I don't want to say it, but what does that kind of look like? And if you fancy yourself a trader and a technician, you got to learn this shit. 2 bars?
Is this a YouTube question?
I don't know anybody.
Railroad tracks.
Thank you. So you want to write that down. That's gold. Also, too, and this is my favorite trade location, but for new people to trading, it's impossibly difficult. But I'll tell you, candle body lows for trade location are the absolute shit. And look at that. I mean, can you see that? Somebody literally just came down. There's the candle body low right there. They kissed it and then just took straight off. You want a killer trade level to concentrate on? Reload zones, candle body lows. Let the market play in this tail, right? The old adage is wicks and tails like to be eaten. So if this is actually a bottom, just expect that price is probably going to try and dip down into here. Are you going to be able to catch the exact low of that? Probably not. But if you want to focus in, like, okay, where's my trade location? Candle body lows. You see those 2 candle body lows? just killer trade location. I mean, hell, you could teach a course just on that alone, right there, just trading futures contracts. So, that's a really good looking level right there. I got to tell you, folks. So, there's your killer buy. Here we are way up top now. I don't know whether I'd really consider touching this right here. If anything, what should I do if I was thinking about trying to get in on this thing right now? Ben, what do you think I should do here?
Wait for the Wyckoff check.
No, that is one thing. You're right down in this level right here. You could work a bid there.
Or
What I suggest people do,
reload zone.
yeah. What I suggest you do is, as this thing's moving higher, you just keep dragging your reload zone tool higher and higher and higher. And lo and behold, look what's happening here. You see that? So, I might argue that your reload zone Wyckoff check is starting to set itself up here, eh? The only thing I would say, though, is, think confluence. Is there anything going on in the short term that might be problematic? So if you go AB, CD, I could see us dip all the way back down. Candle body lows for trade location again, bastards. 88.6. So I could see that happen. Probably the wisest way to play this is just work some bids. You go sprinkle some bids in here. You don't know exactly which ones are going to get filled. But as the market works its way down, first bid gets filled on the Wyckoff check. Maybe another bid down in maybe even 78.6. And then, like I said, this ABCD looks to me like it's projecting like it wants to come right back down to the bottom here. And remember I told you with Bitcoin, I do think that there is some sort of Gessler SEC shock that is coming here over the next month or so. So just be careful, okay? In fact, actually, I was talking to another guy here today, and I said, probably a good idea to just get some really stinky Bitcoin bids working. And he was like, yep, I got bids working from 12,000 all the way up to 25,000. I don't know whether we go that deep. I don't think we do. But working bids against these lows, for some sort of Gessler fuck you, I could easily see that as not a bad idea going forward here. So, anyway, food for thought. So if you wanted to buy, I think we're starting to get some half decent levels starting to form here now, and I keep a close eye on this. If anything, what I would say is stinky bids, not a bad idea at all. But I think I told you that I actually was a buyer of this coin all through this. So actually, I should probably go see whether I even got close. I might have gotten a double off. I can't remember. Okay, so there's my chart there. I hope you guys enjoyed that. We will say beauty, B-A-U-T-Y-W bottom, RLZ bids, working at the moment, fine with me. Derek's still partying with the babies, so I guess he'll be MIA today. I like the decentralized storage narrative. Yeah, I do like, I'm going to say that as well. Nice FA story. But I guess that shouldn't be a capital B, should it? All right. I like the decentralized storage narrative a lot. All right. And Derek says, like how this project has stuck around since last cycle. Like the look of the Wyckoff check and sprinkle some big stink bids down below. Nice. It's perfect. I mean, you guys are now starting to talk like pro traders. So I like that. Good. Okay. Where the hell do we go next, boys? What do we feel like doing?
Do we want to go through and review some of the coins?
Sure.
that we did above?
I want people happy. So what's gonna make people happy?
Or is there anything that maybe is on the top 100 that wasn't there before that people want to see?
Oh, that's an interesting.
Yeah,
thought.
we could take viewer requests. It's up to you guys. I'm gonna say that we did like this Chili's. We might want to take a look at him again. Amp, engine, font, DGB, Digi. Good to see Digi still around. I say I like that Numa location. That wasn't bad. That was probably worth taking a good look at. And I don't mind this Saya. Really don't mind it. Not a bad location. So you guys tell me where are we going next? What do I want to do?
Well, if we can, let's try to keep it to some bigger coins since we were doing a top 100. Dope. So we'll want a DPX, which is DopeX. It's a newer coin, I think, but it's definitely around like that, probably 50 to 80 million dollar market cap. So it's pretty small.
DPX. So I do not see DPX on Coinigy here.
Yeah, you'd probably have to use. It might be on TradingView, or else you'd have to use ChartX Pro. I think it's just on Uniswap. Pro? Yeah, I just get a little nervous doing like small coins. Well, I mean, you can do DopeX. It's not going to be something that I think you're going to say is a huge buy right now. But it's just
DPX.
It's just went up a lot, although it did just kind of W out. Yeah, DPX. Yep.
And which one would you look at it versus the W?
I just do the top one.
Yeah.
It'll be good.
There's an hourly chart, daily. Yeah. Unfortunately, there's no way I could touch something like that. The level 1 program, actually, we teach you about studying volume patterns, and that's not a good sign. Seeing the way the bulls are backing away here like this. If you actually get an up volume day less than this bar right here, that's actually an outright sell signal, volume-wise. So if you are long this thing and you're enjoying the ride and you see that it does, notice here's the volume print up here. If it does more than 500 or less than 553,000 on an up day, i.e. it prints a green bar here, that's telling you that the buying move is done. Got to make sure if these are colored correctly, though. Sometimes these charting sites do different. So hopefully you can see. Big green bar, right? Huge volume, impetus, push, I'm a bull. Then another big green bar, but not nearly as strong. And then over here, hey, where did all those big green bars go? So, like I said, there's another great concept. If you want to take away from this, something you can learn and hunt for. Volume impetus signal. If this thing trades less than that 553,000 on an up day, that means the bull is run out of steam. So be careful. I suppose if this thing is running, then we'll just do really simple, something like that. You can see that this is making a bit of a consolidation wedge here. So I wouldn't be surprised if there's some fireworks down the road. I mean, you're coming really late to the party. Hopefully everybody can see. And really what I need for you to do is hunt for this kind of action, right? Do you see the W's down here? There's W here. So W, then another W, then another W. And of course, if you drew a trend line off the original peaks, you notice, whoops, is that a trend line? Trend line. Well, it's weird how some of these things extend and others don't. Well, why did that one extend? Anyway, so if we just eyeball this, you can see there is the break. Don't take the trade there. Let the market break out. There's actually your buy signal right there. So that bar right there, and also too, can you see the volume started to ramp up here? So if I go boobity boo, boom, it's pretty close. So there's a 1, 2, 3 breakout. There's your W on the other side of the trend line. There's your big fat buy signal. Notice the volume is rising. This volume bar here is higher than that volume bar here. This one, what's that? 337, 331. So that volume bar was just slightly higher. Looks like they took it higher even, but the bears came out and said, okay, enough is enough. And kind of paused things here. But I would say if there was a level to be hunting longs, it would be there. Then also, too, if you want to be really slick, this is tough, but really good traders can pull this shit off. Notice, well, I guess we got to set up all these levels here. Give me a second. So 61.8, 78.6, and then we'll reverse that. So notice 61.8. Actually, this is probably a good example of like Benkoff check. This original W. So market runs up here. Not allowed to chase. Have to work my bids at reload zones. There's 61.8 tag right there. Killer level for a trade. I'm not going to say that's easy. Don't get me wrong. But that's sort of the way that you use that reload zone. You're constantly. So on the next move up, right here. All right, maybe you can even start dragging this low up off of these lows. Maybe you even have to come up off of here or even off of there, but notice reload zones, right? And then back against these lows. Yeah, this reload zone tool, it forces you not to chase, and it forces you to work stink bids. But here's a good example where maybe you're working your bids in reload zone, and it never gets down there, and it leaves you behind. Oh, shitty. So that does happen too, so don't get me wrong. But I do like this reload zone tool as a great way just to keep yourself honest and don't chase, don't chase, don't chase. So the breakout that confirmed the double bottom was there. The pullback against Mountain Man. I think, traders got to trade. That's that level right there. Very difficult. Hey, you want to say, you know what, Brian, I'm not going to even participate in this. Show me a W completely on the other side of this trend line. Well, maybe you just bought this breakout right there. Nothing wrong with that. Nice W. Away we go. Getting a bit expensive. But, you've got lots of W's and the thing's pointing higher. So I suppose if you looked at your momentum studies and they looked okay, I suppose you could get in there. But I do think that the trader's trade is like right down in here. So that's where you should be long. That's 120. Here we are now, 530. I mean, if I was trading this and I was in this, I would be like, okay, notice there's 240. So, let's say we bought this W here. That was 130. So 260 would be my double level. So out goes half. Interestingly enough, we have a fun joke on the site now that we're saying, don't sell half on a double, sell half on a foggy. 2.618. So that would basically be saying here, but I don't like that because I want to get that risk-free trade. So I don't think 2.618 was the level I'd be working, but I wouldn't be surprised if 4.669 is the level where we stopped. Oh, even that was kind of cheap. So interesting how 2.69 at 1.8 is actually a test of those old highs. So the market was sort of projecting, if we can W out here, we're going to take a run at those old highs, which they did. Boom. And here, it even looks like maybe that went all the way up to 877. And it does happen. The only problem with chaos theory is I haven't figured out exactly to say, well, this particular cycle, it is going to go 877. Or this one, it's going to stop at 469. Remember, I'm a confluence guy. So what I would prefer to do is I would say, look, this is a trading range. And I don't know whether you guys remember, but last cycle we had a lot of fun with Dash. And what we did was we basically, keep in mind, markets generally like to move in a very orderly fashion, stair-stepping. And this is what I would affectionately call I call it the parking garage in the school program, because in level 3 we talk at length about how price actually moves. And believe it or not, what ends up happening is you actually end up getting ceilings and floors established at these key pivot levels. And what it really is the way markets move, kind of like how you see it just went straight up here, right? Why did it stop there? Well, at this third level of the parking garage, there was clearly a huge block of whatever the hell this thing is for sale up here. And it just stopped the bull in its tracks. So, if you want a nice study to learn this concept of parking garage and the way that price moves in an orderly fashion, go look at Dash from last cycle. We used to call this Amanda's Penthouse up here at 400% extension. It's really cool to watch the way Dash sort of worked its way up to Amanda's Penthouse. Once it got there, no further. So, again, confluence kind of thinking. If I'm buying here, first off, I want to make damn sure I get that half off at a double, get that risk-free trade going. Once that happens, then the sky's the limit. I definitely think it's a good idea to continue to spoon feed. You can take a little bit more discretion in how you're going to spoon feed. For instance, you notice there's a nice consolidation in here, right? Down, up, down, breakout. So could we do a little chaos theory off of that? So that's our 2.618s and 4.669s and 8.77s. And somewhat helpful. I don't think we actually hit that level. If anything, it looks like this is, I don't know. Maybe the jury's still out a little bit on whether that was a level right in there or not. Sometimes when you draw these chaos theories, you go, you know what? Doesn't look like the market's just respecting that. What happens if I draw the chaos theory off of this consolidation? So, down, up, down, breakout. So this energy range, interesting, 2.618, boom, hit that and rejected. And also, too, remember I said there earlier, Nick said how freaky this stuff is. So notice the breakout run up to 2.618 and then boom, right back down and check that original breakout level. And right now it's kind of going, okay, well, am I really a bull? I mean, I hate to say it, if this thing is really a bull and all hell's about to break loose, we can start doing some chaos levels going up here. So there's that one there. That's definitely a level in play. We could also maybe even do one off of here, where those levels are in play. And this is where I like to use that idea of confluence. Do I see a number of levels that are all sort of corresponding? We could also do parking garage. And hell, use some fun extension levels. I haven't even talked to you guys about this tonight, but what I teach in the level 1 program is the concept of harmonics and the way markets move in symmetrical ways. And so that means using Fibonacci extension levels to try and explain price action. So that's things like 1.618s, 1.272s. The midpoint of that should be 1.445 or 1.441, I think it is. I can't remember. And then also, my 200%. And 1.618 up to 200%, that's that parking garage kind of thinking. So now when I look at this, actually what I see confluence. So I see 2.618 right here. I see 4.669 right here. And I see there's 200% our parking garage top. So if this thing really gets going, it sure looks to me like it's saying it wants to get up to this, what is that, $1,300. Go figure. So at least now, I mean, I'm not saying this thing's a rip-roaring bull. It's good to see. Watch, be damn careful. If the bulls, if they just back away and they're not interested anymore, you'll know by the volume, an up bar being lower than this 553,000. That's not the case now. So as long as this thing keeps pointing higher, I got to say, actually, I'm thinking up in this area. And in a weird sort of way, actually, I can see a setup that I trade that actually could take us there. It's called the bot setup. So I go A to B. Remember I was saying earlier that really the extension levels here going up, they're nothing more than a harmonic expression of price. So A to B, doing the harmonic thing. A to B. Harmonics basically says that we don't really move in one line. We actually do most of our moves in steps. And so interesting, A, B, C, D, there's some more confluence. Isn't that interesting? So we've got 127s and we got 2.618 lining up there. And what I would do to trade this is I would measure this range, ask whether we did 33 to 66%, which it looks like that is. What I would do is I would take this range here to here, and then I would just replicate that over here, right? Which in essence is your A, B, C, D, our target right up in here. I would actually, at this point, it's a little bit complicated. Don't really need to teach you this setup tonight. But I would take this range and break it into quarters, and it would actually set up a nice 3-to-1 risk reward for me. So if I was trading this, then I would just simply go, looks about right. Let's maybe move this over so we can see it a bit better. All right, so, we'll flip this around so we can see the levels. So there we go. That would actually be my long entry. I would try and get in. We got one low, two lows. It's a bit difficult. If I could get a nice pullback in here, we got this trend line it's playing with. Interestingly enough, if we got a pullback down in here, give me a nice W. Anywhere around that 25 level, right in there. I don't mind that as a long. Basically, I would risk that window there, and I would look to take profits, maybe partial profits. Don't have to sell the whole thing at this level here, this confluence level. And that produces a nice 3-to-1 risk reward. So that's actually how I would try and trade this going forward. Interesting. And, at this point, if this is a double, what is that? It's $900. If you did buy oh yeah, look at that. Perfect. So it is a double. So if you did buy this at $450, you let half of it go at $900. You got yourself a risk-free trade. You can trail the rest of this, looking for this big honking confluence area up here at $1,300 to let some more go. Nothing wrong with that. So anyway, there you go. Fun with charts. What a mess. Did that make any sense to you guys at all? I hope it did. Crickets. Maybe I lost.
Well, I mean, it made sense
great
to me. But,
oh, good. Excellent.
I mean, outside of, I think, maybe just the diagonal trend lines, pretty much everything you talked about is a level 1 concept. Almost all, like some of the parking garage stuff, not quite, but we do introduce that in level 1. But,
yeah,
so
the parking garage is a level 1 concept. The volume impetus here, ironically enough, we haven't even looked at things like price momentum. We could probably get some more help there as well. Things like reload zones. I mean, I've often said over and over and over, you can get things like indicator signals completely wrong. You can get price structure completely wrong. If you focused on location and got that right, you can get away with a lot of mistakes trading. So reload zone is the most important concept here. Every new person to trading must learn. The extension levels actually for the level 1, I don't even want you thinking. I mean, technically, this is actually what they call a PRZ, which we're going to learn in level 3 when we actually learn about how to trade harmonics. And this actually, believe it or not, is actually a shorting trade location. But I don't even want you thinking about that in level 1. That's just way too stressful. What I want you thinking about is trying to get in off of these W's at the bottom end of ranges and then look to take profits as we head into these PRZs. And in fact, the level 3ers right now, the very first week of the level 3 program, I give them a 350-page manual that they have to read by week 3 of the level 3 program, introducing them to harmonic trading. So level 3 is where we start trading harmonics in earnest. But I don't want to start talking to you guys on free videos and stuff about hunting shorts here just blindly. It's very, very advanced trading. And some of these harmonics, right? The irony of it all is when you're up at the top end of trading ranges, quite often you'll get like a W pattern that comes in. Let's say this market started all the way down here, right? Or I don't know, down here, and rallied up to here. You'll get like a W that comes in all the way up at the top end of the range, and new people to trading are like, whoa, should I buy that W? And it turns out this actually is a very cliche bearish harmonic pattern that you actually want to short this right here. But I don't want to get into that kind of conversation with you new people. We wait till level 3 where I know you guys got the concepts of reload zones and market structure and how to appropriately approach this stuff. Buy against the bottom end of range, sell against top end of range. You got that stuff licked, and then we can start talking about like shorting W's at the top ends of ranges.
Wait, I do have to go back there. Do you actually give people a 350-page book to read?
Yeah, definitely.
Wow, that sounds like fun. I can't wait.
Yeah. Well, where are you? You're you're
I'm
level
in 2.
2.
I'm in level 2.
Dude, level 2.
I got a whole 5 months.
That you've got to read Jimmy Dalton's book, Mind Over Markets. So that's a good 100, 200 pages. And really all I want you to read is the introduction there. You've got to read Duplessis's Bible on point and figure charting. That's like 500 pages. Let's see. What else do we throw at you at level 2? Oh my God, you got to read Gann. You want to, hey, you know what? Here, Nick, you better get to work. You want something thick to dig into. I'll give everybody. I'll even give this to you on the YouTube page. You want a challenge? You guys fancy yourself traders? See if you can. And Nick, you have no choice. And Derek just went through this. This is probably why Derek's not here today. But it's only 33 pages. But I would argue reading and understanding this 33 pages is the equivalent of reading a 1,000-page book. So, you open your mouth and careful what you say, because Brian might just stuff it full of work. You got yourself some work to do, sir.
Challenge accepted.
You've got a lot of reading to do in level 2. You have a lot of reading to do. So, trust me, dude. I'll keep you busy anytime. And this is my word to anybody on the site. Anytime anybody on the site comes to me and says, well, Brian, I'm kind of bored. I got nothing to do. Oh, my God. I can make you very busy, very deep in the weeds for a very long time. So, have you finished reading How to Spot Profitable Timing Signals?
I think I'm about 2/3 of the way through. I'm on page 26 of 38.
Good. Fantastic. I actually got this when I first got into the business, like in the 1980s. I have a physical copy of this book. And look at the price charts. Like this. Remember, Ben, have you ever heard me say that I used to get my price charts in the mail?
Yeah. That's crazy.
What these charts were. These were the charts, and they were like literally tissue paper. I mean, you could, if you even looked at them the wrong way, you could blow a hole through them. So that's how old this document is. And it is by far the absolute best trading manual I have ever read in the market. Ever. Never seen anything that can even hold a candle to it. Hell, they even walk you through how to actually build a relative strength study. Does anybody, I'd be curious, anybody on YouTube even have the slightest idea of how you actually go about building a relative strength index? And, I used to have a 1980s website that had all of these technical tools on the website, so I had to teach myself how to actually build RSI studies and how to actually come up with the correct formulation and numbers. So, as I said, this is by far the best trading manual that I ever got, and they used to give it away for free. The company that did it, have you ever seen anybody go into such detail about stochastic? I mean, look at this. They tell you exactly how the math of it works, how you interpret the signals. I mean, I haven't even gotten around to stochastics yet on this site. How about ADX, the average directional movement? I mean, and this is really cool. I haven't even gotten into the teaching of this, but this is phase analysis. I don't know whether you guys have ever even heard of phase analysis before. There are a lot of people that trade the market purely on phase. Like I said, Nick, if you want some work, I can give you lots and lots and lots of work.
Good.
Anyway, this was and it used to, because I was a broker for years and years and years, right? So what these brokerage houses used to do was, how do you differentiate yourself from one broker to another, right? They're all basically the same, just different house. So we used to bribe our customers with all this marketing material that the good people at the Commodity Research Bureau used to put out. They used to spit this shit out for free. I'd have boxes of these booklets that I would just hand out. Now, it's almost impossible to find this information.
Now you give it all out for free on YouTube and get them to come take your classes and learn more.
Fucking A, man. I mean, first and foremost, we're not reinventing the wheel here, right? Everything that I teach, the psychology of commodity price movement. Have you ever heard of us talk about the psychology of markets? What do bull markets look like? What do bear markets look like? Nothing really here is new, but what I really like about these guys is they really break it down, in pure, simple math, pure, simple language. In fact, in the Level 2 program, we're going to teach you about gap theory. And are gaps filled? Shark Toshi's around. He'll be more than happy to tell you what the percentage of time that gaps are filled in. But I've never seen anywhere on the internet actually explain this as well as these guys do. It's really, really great stuff. So anyway, you got that to look forward to, dude. I can keep you super, super busy, right? You've got to, for this here, the definitive guide to point and figure charting. Let's see how long this one is. This one's only 487 pages. You should be done this by the end of the week. Get to work, buddy. All right, anyway, just having fun with you. Well, 10 minutes to the top of the hour. We did take a look at this little one. It's kind of a fun little story. It's not really something I would probably be interested here. I'd be interested down here. We want to do one more before we call it a night? What do you think? Up to you guys.
I can stay on. I could watch you drop charts for days. So
that's sweet.
If you're willing to do another one, I am happy to watch you do it.
Well, I'm going to be half eating my dinner here while I'm doing this. So if you don't mind me talking with my mouth half full, well, we'll keep going.
Sounds good.
Do you want to do Polkadot, which is just dot? I know Algo just went crazy, so that one you're probably not going to be too excited about.
Well, Algo, man. I was long this thing for out the fucking ass. I owned so much of this, and I made so many doubles off of this Algo rand.
That was the Binance thing where you had to sell it?
Yeah, and then fucking and this is capitalism for you. So fucked. Basically, I used to have, and I don't even see it on here, but I used to have Algorand on Trex. And then Trex kicked it off. So I was like, okay, well, I guess I'll go send it over to Binance. And then, my dear leaders here in Canada told me you're not allowed to play on Binance anymore. Man, I had a ton of this shit. I made a lot of money on this damn thing. What a piss off. And then, like about 4 or 5 months ago, that stupid, why are they doing this? Stupid idiot bureaucrats. I had no choice. I just told Stuart, just blow it out. Got to move on. But I'm so pissed off at this one because everybody should look at this and go, oh, gee whiz, that's got Beamish written all over it. In fact, it's got Ben written all over it too, eh? You see that, Ben? I mean, now the irony of it all, Ben, hopefully for the rest of your life, you're going to see this, and you're going to constantly see this for the rest of your life.
I think I am.
Good. Well, hopefully I sunk through to you.
While we have Algo up here, just real quick.
What a piss off.
Avalanche, Phantom, and Algorand have all announced like very, very incentivized like DeFi kind of events coming up. And so if you do participate, if you don't, ignore what I'm going to say for the next 20 seconds. But if you do, I think there will be a really good chance to, if you like one of those 3 coins, Avalanche, AVAX, Algo, or Phantom, there'll be a pretty good opportunity to get some of those coins essentially for I won't say for free, but for kind of letting them borrow your money for a little bit. And so if you do participate in DeFi and you do like those, you might want to go check those ecosystems out, because when Polygon did it earlier this year, everything in the Polygon ecosystem just went crazy.
Yeah. And that's kind of like, we could do some foggy boggies here. So, what a surprise. Should that surprise anybody over on YouTube watching this now?
I was going to say, I think Colin actually, he likes to show Algo for his, whenever he does a demo of the Foggies, because it throughout time has hit a lot.
That's nuts, eh? And then also, too, how it had to come back down to the original breakout. I mean, Jesus. This kind of stuff, it's so cliche, eh? But, I suppose you could argue that this thing and now might be setting up a huge consolidation. I got a funny feeling I'm gonna lament this goddamn coin. It's gonna drive me crazy. Now I suppose we could probably justify, and actually remember I showed you before we had a 2.618 that basically was up against the old highs. So that's probably what's going on here. So, damn. Yeah, what are you going to do? Eh?
One thing, though, like these incentive programs, they are paid out in the tokens of those ecosystems. So right. Algo will be inflating a lot. Avalanche will be inflating a lot. Like
stop saying that. You're killing me.
No, inflating the supply, which means there will be a lot more sell pressure as well, because most people want to get these tokens to sell and realize their gains from supply and liquidity.
It's weird, I would say yes and no. Like right now, especially with this, what do you think the sort of momentum is right now?
As far as Algo?
Yeah, just looking at that image, what do you think momentum is?
I mean, momentum is generally positive. We've had a little bit of a pullback, and so...
Show me a new high, show me a buy, right? I mean, really simply put, think of like a wave on an ocean, right? This momentum is up. And usually it takes quite a while for that to dissipate. And what's really weird, what happens in speculative capitalists, you notice, look how long it took to go from here, like, oh my God, insane up, to actually over here where we're actually pointing down now. It takes quite a while. So what ends up happening is, you get the pump up and like you said, new products, new initiatives, stuff like that, ramps the name up. And then what's so sad, of course, is all the late people, they're the ones that come in and buy this part of the market. And what they're really doing is they're just chasing the dream. And a lot of them, they won't even know what the hell it is that they're buying. They won't know that the reason why this thing pumped was because of a whole bunch of new stuff that's coming down the pike and stuff. And the irony of it all is that stuff will come to market. Then the public, because this is exactly what happened in 17, 18. I remember the first quarter, like because, what ends up happening with crypto is people come in, they get seduced initially by the Bitcoin price action. But then they go, Bitcoin's already moved up, so maybe I'll go look at those altcoins. I'll go and I bought some Bitcoin. Now I'll go and let's see if we can get a 100x off of an altcoin. So they buy their Bitcoins here. Oh, great! So I just bought my Bitcoins at 47 G's. They take the Bitcoin now, and then they go and they buy this thing, but they won't buy it in tethers, right? They'll buy it in BTC. Did I get that right? This is exactly what happened last cycle. They'll be like, well, and my hunch is by time the public actually does come in, and look at this thing, right? I bet it's probably like up there. You could do foggies off of this range here, probably 2.618s are in here. Could probably do like reload zones against these highs here. My hunch is there's probably a lot of resistance in there. There might even be some price gaps in there. But point is, this thing will go zooming up. And they bought their Bitcoins at like 45, 50 G's. And then they go in and they chase this thing up here. And then, kind of like, and actually, no, this doesn't go that far back. I don't think it looked like, it's fascinating. Why is there no data for this stuff going back? There should be. This thing has been around forever. Tracks. Actually, it'd be interesting to see what it looks like on tracks. Oh, isn't that interesting? Yeah.
I was gonna say I don't.
That's interesting. I don't think it's on tracks, is it?
I wasn't around back then for the 2017 cycle, but I wasn't sure if Algorand was actually around.
Yeah, I don't think it was.
Oh, you son of a bitch. So, and this pisses me off about fucking Trex is it looks like they've actually brought it back. Bastards. I tell you, I mean, it's been fun playing in this space, this cryptocurrency space, but I gotta tell you, man, this space is corrupt as fuck. I mean, it is way worse than even like bulletin board and stuff like that. The way these exchanges fuck around with these prices and stuff, I tell you, I'm pretty disappointed in the way that this, sites like Trex and stuff operate. Not impressed at all with this. And now you guys are heading off to trade on DeFi. And did either of you listen to Elizabeth Warren today and her conversations about DeFi?
I didn't hear what she had to say today, but I've heard a lot of what she has been saying, and it's shocking to me that she can be so. And the thing is, like, I don't think she or any of the politicians speaking about this are necessarily dumb. I think they're actually pretty smart and they understand it. I feel like they're just saying things that they know are wrong to get whatever they want done.
So the one thing that really bothers me about this is she made a perfectly good argument. I'm a Joe investor and I want to go buy $100 worth of this. And we've talked about this before. And I think you're right that, and I think I said this in the video today on the site, that I think that meltdown that you saw there the other day was actually engineered. It was done on purpose. It was probably done by Goldman Sachs. Where can I show you that?
Are you talking the one last Monday or just the Litecoin thing?
Well, this Walmart? Right here. This dumb.
Yeah. Yep.
And then, yeah, like we had the action on Litecoin too there. I think that was also done on purpose. To illustrate that if somebody did need to get out of DeFi, that $100 investment, and they were panicking, number one, were they actually even able to get a market bid and offer for their asset? But number two, how much in fees did it actually cost to get a transaction done through that chaos? And she was saying it was something like, I don't know, like $300 or $400 in ETH fees to get her $100 investment out of her DeFi investment. And we've talked about this before, guys.
I think this is important to delineate. The one reason I do like using DeFi is when we had that crash, kind of the first one that you were talking about, that one right there. All the centralized exchanges went down, but DeFi was still working fine.
Well, and they also said that too. They said, she's like, well, what are you supposed to do if your exchange just disappears?
That I think is a problem that will need to be dealt with. But for the fees thing, if you're on Polygon that I used all summer when ETH fees got crazy, I'm paying less than a penny to make transactions on that, and that still goes back down to the Ethereum network and resolves there.
Well, that's good. So if anything, we should even send her a note.
And like Avalanche does the same thing. It's very cheap, not as cheap, but it's very cheap. Solana is very cheap, although they had their own issue yesterday. Like there are plenty of cheaper chains. Like obviously Binance Smart Chain's really cheap too, but neither of us really like them. There's plenty of cheap blockchains. It's just ETH right now, until they get to proof of stake, is going to be very expensive.
Yeah.
But you don't need to trade on ETH. Trade on one of the cheap ones.
All right. So Nick's got an answer for you, Elizabeth. Take that. Put that in your pipe and smoke it. All right. So what was the original question? I can't even remember.
Do you want to chart Polkadot?
Oh yeah.
No, we're over time though. We could stop. We had a good. I enjoyed that conversation.
Oh, Algo! You got me all excited about Algo.
I did.
Fucking assholes. And now I see Tractor's gone and listed them again. Cocksucking sons of bitches. Because that's the one thing that pissed me off about these goddamn exchanges. Is they just willy-nilly decide to delist these things. And then and if you don't do anything, poof, all of a sudden your coins just magically disappear. And then they just magically out of nowhere decide to relist these things. It's corrupt as fuck. And I would argue, if you were going to make a case to shut down these centralized exchanges, that alone is a huge motivator. Anyway, not to get me too excited. All right, your dot. Let's take a look at this dot. Same thing as before. And probably a lot of these names will see the same thing. And I seem to recall that we've talked about this before, that it was like a year or so ago that when you really should have gotten into these things. I suppose if you were a bull, they say the longer the channel, the bigger the run, and I would say that's a pretty darn long, narrow, sideways channel there. Double bottom fired multiple times, higher highs and higher lows. I think there's lots of reason to be interested here. What is that number? That's $5. So $10. Out goes half. Get yourself a risk-free trade. That was probably that action right there. This was FOMO blow off top. Sucked all the kids into buying up here. Sadly, probably they were buying into institutional sell orders. Market worked its way back down. Was able to stabilize. Interesting. Nice little inside bar there. And then start to work its way back higher. So, point of the matter here is there's your bottom. Then as time goes by, higher highs and higher lows, not bad. Unfortunately, through all of this, can't chase, don't chase, not allowed to chase. Interesting how that low was a 61.8 tag. But as she moves higher, you just got to keep drawing your reload zones up and up and up. So I could buy here. Could buy here. Oh, hello. This is getting interesting. Boom. Finally came down into reload zones. So we're now finally back into sort of like, okay, this is location. Not really impressed with this bottom here. That's uglier than sin. And if anything, this makes sense. This is a DeFi name. Because I do believe that
it's an Ethereum competitor.
All right, so I do believe that the bombshell that's going to be dropped here over this fall is about DeFi. It's about these stable coins. It's about regulators being happy. What is a security? The fact that this did make a V bottom, notice there's really no serious test of this low. Normally, of course, we nice wide bottoms, Sir Mix-a-Lot, all that kind of talk. That never happened here. So if anything, we have a simple rule. V bottoms like to be tested. This looks bothersome to me. I'd be a little bit worried. If you did have the balls, again, there's 78.6 like a boss. If you did have the balls to accumulate through reload zone, well, I certainly hope you're selling halves on doubles and getting that risk-free trade. And what I would probably say, this was a V top as well, right? That was a new high. So ironically enough, that high, just like this V bottom should be tested, that V top should be tested. And also notice too, there's a cheeky little gap right there. So I don't know whether Sharktoshi answered the question, but he's so good at this. I don't know whether, do you guys know? What's the statistical normal probability of gaps getting filled in? Any ideas?
It's like 91 point something or 92.
Yeah, I mean, when you get up into like 90% kind of conversation, that's a hell of an edge. I would definitely, at the very least respect it. So, 61.8, 78.6, reload zone. Oh, look, there's the gap. So you can see it. It's just sitting right up here. Right there. Oh, now you can really see it. So I might just put a line right on there. And that's probably that's going to probably be a hell of a resistance point right up in there. And unfortunately, foggy boggies, we don't really have very good foggy boggies to work with. We got this little one here. Let's see where that takes us. One thing I do like about using TradingView is it has templates for all of these things, so it makes it easy to load all this stuff up. But let's see. So foggy boggy. Oh yeah, okay. I guess that explains why the market stopped there, eh? That's incredible when you see that stuff.
Interesting that the 4669 is pretty much right at that last high too.
Yeah, well, that would mean 4669 would mean that we're basically breaking out two new highs.
Yeah.
I got a funny feeling there's going to be a bit of a fight up in this area right up in here. So
I was hoping that chart would be a little more interesting, but I knew Algo and Adam, the other two that somebody had asked for, they just hit new all-time highs. So I was like, well, you're not going to tell us to buy there, probably. Well, I don't know. Show me a high, I'll show you a buy. But
yeah, unfortunately, that saying actually comes from commodities contracts. So it's a direct reference to if you see a commodity contract trade at a new all-time high, then that's just a no-brainer buy. I don't know whether I really like the idea of coming in and saying, well, if it makes a new high, then that's a buy. That's very, very dangerous. And as you can see here, ouch, ouch, and then, oh, fuck me. Ouch.
Yep.
So, I'm not really the biggest fan. And unfortunately, because that's a V-top, that really, I would say this is a trading range. Top end of the range, bottom end of the range. And all we're doing is we're just banging around inside the range. And like I said, I don't like the way this looks here. So that's a bit disturbing. Okay, why don't we leave it at that? I still got a little bit of dinner to finish here. So I'm going to go and enjoy the last of my meal. I feel a little bit talked out. And of course, I'll see. We'll see you guys. Well, I don't know whether do you... Are you getting to the point where you're interested in day trading? Do you follow along the battle stations room?
I
You don't have to. We don't want to push.
No, it's something where I think I want to get through level 2 before I start listening in a lot. I listen in, I stop in for maybe 20 or 30 minutes a week,
Oh, good. Well,
just to listen a little bit. But I mean, a lot of it is, if I don't catch it at the right times, a lot of it's just kind of silence and watching anyway.
yeah.
So
Well, I'm very proud of the boys. I think they've done a fantastic job of building out that day trading room. So proud of them.
I am really looking forward to having Kieran as an
Yeah,
instructor.
yeah. He's a sharp little guy. Um, Smart as a whip. So yeah. Okay, Ben, you're awfully quiet. I
Yeah,
suppose,
yeah. I
pretty,
mean, I catch Kieran on the daily briefs. And,
yeah, he comes on Tuesdays,
it's
right?
good stuff.
Yeah.
Yeah,
Next,
but
I think you got to get through the level 1 first. We got to get you a trading plan first.
right, exactly. Temper my shiny object syndrome.
All right. Okay. Well, why don't we leave it at that? Thank you so much for your time this evening, gentlemen. I appreciate it. I really like working with you guys. Maybe we'll get a report from Derek when he's dealt with the babies.
I'll say, question: are we back next week, or are we done for a while?
I don't
What's
know.
the plan?
There really isn't a plan. I mean, I just sort of throw this together and try my best. I will say that at the end of this month, I am moving. So, and actually, I'm planning on doing the big move here on the weekend of the 24th. So, I should be pretty active. We'll have our first class group tutorial Wednesday afternoon. Wednesday's usually a pretty busy day for me on the site anyway, right? I'm going to be MIA through this weekend here as I'm moving, but I think Wednesdays I'll be around. It's up to you guys. If I'm burnt out at the end of the school term, I do like to take a couple weeks off and recharge a little bit. But I've had about a month or so off, so I'm all recharged.
Okay, I'm good to start over, or to do like a greatest hits, or to mix and match.
We could
I'm fine with
maybe
whatever we want to do.
We could maybe do like viewer requests or something. Maybe build out a list of names that are popular. I don't know. It's up to you guys.
Sure. Yeah.
Maybe
We'll figure something out.
give it some thought through the week. Maybe you guys over on YouTube, somebody post a comment or however it goes. I can't remember how we do this thing here. But okay. So big predictions for next week. 48,000 right now. 1 week from now. I know it's gonna sound chicken shit, but I'm gonna go with another 0. I'm just not certain where we're gonna go. For whatever it's worth, and I kind of told you this earlier, I think we're in this right now. So I would like to see one more shock to the downside before we start our face rip higher. So I'm going to stay neutral until I get my little shock event, and then I'll turn back bullish. But I'm not quite ready to be bullish just yet. So that's me. What are you thinking? Who's that now? Next on the hit list here? Nick, what are you thinking?
Yeah, I think I'm with you this week. I mean, we've had a pretty decent rebound from the big dump last week, but I kind of feel we'll just kind of range a little bit here for a while.
Okay. And Ben's turned bearish. So Ben's looking for us to.
Yeah, I was sitting there last week, so nothing's really changed for me.
Oh yeah, okay, all right.
Yeah.
So if anything, consistency like that. That's a good sign. All right, so same bad channel, same bad time. Hope you guys enjoyed the offering. Hope you people over on YouTube enjoyed the offering. Of course, all you new level 1ers, if anything, when you're in class and you're in the school session, you can almost look at Ben as a little bit of a mentor for you guys, all you level 1 students. So I hope, Ben, maybe you can pass around a little bit of karma to any new people in the level 1 program that are just starting up, because I think you've got a little bit of a head start on them.
For sure.
So I appreciate that. Nick, if you run out of stuff to read, I will be more than happy to stuff your nightstand full of material. You've got, by next Wednesday, you've got to finish that GAN article. The secret to my forecasting method. You've got Duplessis's nightstand read of 450 pages on point and figure charting, and you have to finish off your how to spot profitable timing signals, eh?
I was gonna say I will commit to finishing off the spot profitable timing signals, and I will get through that Gann article.
Oh, good. That's a hard fucking read, though.
I've got a full week. I can do
hard
it.
read. If you can get through that, I will give you a very big golf clap.
I will do it by next Wednesday.
All right, good, awesome. And also too, in that program, I request that you come up with a synopsis of what the hell he said. So it's one thing to read it. Now the question is, did you understand it?
Yeah, I will at the very least read it, and
we'll
go
see
from
how
there.
it goes.
We'll go from there.
Okay. All right, everybody. Have yourselves a great afternoon, evening, wherever you are in the world. I don't know who took us out last, but I'm gonna volunteer Nick to do it today. I don't know whether there's a New Mexican greeting or farewell that we give, or a Minnesotan one, but you've got the floor. So the only thing left for us to say to you good people here tonight is...
Bye for now.